Have you been to downtown San Francisco lately? If so, you may have noticed a glut of empty commercial space. Our media partner, the San Francisco Standard, reports today that the situation is bad, that downtown commercial real estate is poised for a collapse. Joining us live now is the Standard's editor, Gaus. Annie, nice to have you on the show.
Thanks for having me.
So you took a deep look at this. How high is the vacancy rate right now?
Yeah, well, according to the latest statistics, the official vacancy rate is around 20%. But when you account for the space that is also available for sublease, there's somewhere in the ballpark of 25 million square feet of space available in the city. That's equivalent of the 35 Transamerica pyramids sitting empty, to put that in context. And so this is something that's really like there's a historic amount of space for lease on the market, and that's what you're seeing in all these empty buildings.
Yeah, when did things take a downturn like this, right? Because for a long time it was like we needed more space, so there was a lot of building. What happened?
The pandemic happened. So, San Francisco, we have a very tech and software heavy economy. And what happened when the pandemic hit is that a lot of those tech companies went remote. As a result, they dumped office space. They left the city entirely. They switched to remote friendly or hybrid work schedules. And what we've seen as a result is that far fewer people are commuting into offices. The available data we have suggests that about 30% of the people that were commuting before the pandemic are now going to offices. That's lower than any other city. And so as a result, we're starting to see these downtown buildings losing value. And if these trends continue, it could mean real problems for the city.
Speaking of losing value, you sent us a graphic that was part of your story. I thought this was really interesting, looking at other big cities in America as well, in terms of how much the valuations have gone down. That is the real estate, commercial value of the buildings. Walk us through where San Francisco stands on this.
Yeah, San Francisco was the worst city that this research team looked at. They looked at, I think, 8 major cities. And in a worst case scenario, this team of researchers from the Institute of Taxation and Economic Policy forecast that in their upper bound range, San Francisco commercial real estate values could drop by as much as 43%.
So you're telling me,
was the highest.
like, let's say I had a $100 million building, I own that, and now it's worth maybe $60 million. What does that do to the tax base? I imagine this impact to the city is pretty devastating.
Yeah, well, we're already seeing a lot more property owners who are asking the city for reassessments on their property, essentially trying to cut their tax bills. We do have some protection from a sudden kind of wholesale collapse in that Prop 13 is in effect. That's a law from 1978 that restricted, how reassessments can happen, and that offers some protection from a huge wholesale collapse in a downturn. And it's not unusual to see these reassessment, requests in a downturn, but the same research team, forecast that if we do see a dramatic fall, in the order of 43% for these values of these buildings in San Francisco, that could mean nonetheless a big hit to the city's property tax base, and that is our #1 source of tax revenue. So, any decline there would be pretty significant and pretty devastating.
Because it means less money for all the services that we provide, the agencies and all that. So, all right, Annie Gaus, fascinating stuff. I encourage people to read your full article on the Standard's website. Thank you so much.
Thank you.
And you can check out more of the San Francisco Standard's other original reporting as well on their website, and that is sfstandard.com.